What's going on, guys? Welcome into today's episode of Money Moves. We've got a jam-packed schedule of topics today. Is the global reserve currency shifting away from the American dollar? Is Trump going back on his pick for the new Fed chair nomination? We've got silver crashing. We've got crypto crashing. We also are going to be talking about some key personas and skill sets if you want to be successful, 3 in particular as a real estate investor. We may be seeing rent now, pay later come into real estate. We got a lot to dive into today. Let's go. Well, we have a lot to dive into, Mr. Breedwell. Welcome back. Happy post-Super Bowl.
It was a terrible one, but happy post-Super Bowl to everybody.
You know, I go back and forth. It was somewhat of a snoozer, definitely offensively. Like both offenses pretty much sucked. If you're a defensive fan, you loved what was going down because both of those defenses were playing pretty damn good in light of everything that was going on.
Yeah, to me, it was... I just wanted to see somebody score.
Right. I wanted to have something to cheer for.
Yeah.
Field goals are not exciting. And, you know, I think they scored their first touchdown in the fourth quarter for the Patriots. I was like rooting for them to maybe make a little bit of a comeback and see a game. We didn't. So another Super Bowl
wasn't that good. The Bad Bunny one, there was too much going on.
Yeah.
All the politics aside, I was like, oh, you know, if he gets on stage and he has a good concert. It wasn't a concert. It was like a really fast, choreographed, movie-ish thing. They were in a freaking cane sugar field. They're picking cane sugar. It was a bunch of weird imagery.
You didn't understand it?
Well, I mean, I kind of get it. It's kind of woke. And then it's in Spanish. I mean, I'm just like, I don't know what the hell he's saying. It was literally just like, have you ever heard a Spanish
every once in a while,
TV show on? It's just like sitting. It's like I have this is the equivalent level of.
Oh yeah, if it's a TV show,
I have no idea what's happening.
If it's a beat or music, like every once in a while, let's call it pre this Super Bowl show. Every once in a while, I'd hear a Bad Bunny song or even like a other Spanish superstar, right? And you're like, oh, this is a little bit of a vibe. Right? Like you catch a vibe.
You know, it sounds all about that.
And I think, and I'm somebody where like I like hearing and seeing other people's cultures. That being said, I think there's a time and a place for that. And in the context of the Super Bowl being the largest American sporting event in every year.
We're in America.
The fact that usually they pick kind of like iconic, multiple generational appeal type of superstars. And even like if, you know, Shakira were to get up there, right? She's singing half of her songs maybe in Spanish, but she's singing half in English, knowing that whether you're Black, Indian, Asian, white, you know, Hispanic, like you want to try and appeal to the masses of your audience on that stage in that particular event. And just singing in Spanish the whole time. And his story was really more so, I think, around like, you know, I'm from PR and I grew up doing X, Y, and Z, and here's your Grammy. You can go have this dream too, which, hey, that's all cool. I love a good message like that, but you missed the opportunity to appeal to the broad masses of the time and the place that was the concert that it was, right? So
I flipped on the other one, the turning point.
After a while, it was just kind of like, I can keep vibing a little bit, but like, I can't relate to anything that is, you know, being said right now because I just don't understand it, right? So I think it was, you know, a little bit of a miss there, but I do think it was less woke than I thought it was going to be. Like the fact that he had a man and a woman getting married versus, you know, 2 dudes, or it was like less political statements woven in there than I thought it was going to be. He wasn't wearing a dress, right? I think, you know, you can maybe chalk some of those up for wins, but yeah, it was a little interesting. But overall, I thought the Super Bowl kind of missed the mark in terms of just like,
this was
overwhelming.
The worst one I've ever watched.
Yeah. It was
one of the best ones was when they like surprised us with like Eminem.
Oh, that was, I always refer back to that one.
Oh, this is a good, you know,
we got Lady Gaga and Ricky Martin. That's what it was. But
you know, even I will say this: the best thing. I'm not a huge fan of Green Day anymore because they're a little wild.
I thought they crushed it.
They did good in their show.
I thought.
See, I could even put that aside and tell them, hey, tip of the hat.
Yeah.
All threw down.
Yep.
That was probably the best part. After that, I think the best thing is that Sam Darnold's probably going to retire.
You think he's going to retire?
Yes.
Why?
He sucks.
But he just got cashed and won the Super Bowl. Of course he's not retiring.
He ain't going to do that again.
No way. We'll take a side bet that he ain't retiring.
I'm hoping he retires.
You're hoping.
Yeah,
I'm
he's
hoping.
He's
Not
not
retiring.
Yeah.
All right. Well, jumping into the U.S. economy, Marco Rubio was recently put out in front of the news media as kind of being the point guy of this administration, because he's really well-spoken.
Mm-hmm.
He handles questions well. He can debate the hell out of pretty much any topic that he knows, and he knows a lot. He basically came out in a press conference that said, we are not the global reserve currency anymore for half the world. There's concerns around that. Let's give a listen to what he said and what your thoughts are.
In our hemisphere, largest country in the Western Hemisphere south of us, cut a trade deal with China. They're going to, from now on, do trade in their own currencies, get right around the dollar. They're creating a secondary economy in the world, totally independent of the United States. We won't have to talk about sanctions in 5 years because there'll be so many countries transacting in currencies other than the dollar that we won't have the ability to sanction them today.
So this kind of goes back to the whole BRICS conversation that has just continued to stay out there. There's a lot of scenarios and talking points that I think, maybe make an argument for there being some concern about it. Also, there being a lot of stuff that discredits it, right? What do you take of Marco Rubio, though, going out and saying, hey, this is somewhat of an issue, and there are more countries transacting in currency that aren't the US dollar? Is this something, being that they can't control a lot of the negotiations or the posture, the kind of climate through sanctions, that is still leading to potential concerns down the road? Or is this still a big nothing burger in your overall opinion?
I still think it's a big nothing burger. That sounds like it's something to
It's a good little
maybe,
clip, right?
maybe to most people. And I think it's really just putting light on the subject. But the fact of the matter is the majority of the world trades their companies through the New York Stock Exchange, trillions of dollars a day. There's nowhere else in the world that happens. There's nowhere other economy big enough to handle that. It's just doesn't line up with being sounding like it's actually going to come to fruition for me. Just like the BRIC stuff. I told all those countries that the problem with China is the deals they make, if they would actually do them in good faith, would actually work out for both parties.
Yeah.
But they always end up fucking the other party with like really bad debt obligations, and then they don't normally follow through completely on their end. And that's why the Belt Road Initiative, if you don't know what that is, look it up, hasn't been as successful as people thought it was going to be after we saw the PR campaign of it. They did really good at their PR campaign. But all those countries, if you go look at where they've invested, those countries are just more in debt than when they got to. And who are they paying? China.
Mm-hmm.
So they get stuck with all this debt and they're just paying China. And it's just typical China. It's all fluff. Nothing really ever happens. And it's manipulated to make it look like one thing it isn't. That's why ultimately they'll always rely on the US to be a strong economy. If that ever happened, tell me this. If you're the manufacturing center for somewhere and then they stop buying for you because people are using your currency, what are you going to do to, like, you're a manufacturing hub. If you can't manufacture anymore, now you're a consumer, your economy is going to crash.
Mm-hmm.
You're a exporting economy. You're not an economy to import or to consume. We are a consumer-based economy with the big enough strength to also do a dual purpose and export. China's not that way. So it all sounds good. I don't think any of it's ever going to come to fruition.
Well, I think to the point too that people just don't trust China.
No,
There's no transparency or over time been accuracy to what they say and what they do, or I guess congruency.
No major developed economy, minus maybe Russia.
I think it's more of a political posture
Correct.
of continue to play chess and keep America on its toes. But I do think that we're still, very far away from this becoming a reality of let's sound the alarms. Like there's
5
some
years.
real concern
That's ridiculous.
here. All right. Well, we have, as of this week, particularly yesterday, Trump admits that he made a mistake with the nomination of his Fed chair. It seemed to be making the rounds all over social media last night. Let's go ahead and give it a listen to hear what he made a mistake on.
Kevin Warsh.
So,
Officially, it was 2 Fridays ago, but when
well, I made a mistake. He was runner-up, if you want to
he
say
was a
that.
finalist.
Yeah, he was, and I made a mistake because I had somebody that was my Secretary of the Treasury, wanted him so badly, and I didn't feel good about him. But sometimes you listen to people, and it was a mistake. It was really a big mistake. But I think we're going to do something that's really spectacular.
I didn't watch the full clip until just now, and I think people are kind of taking it out of context. If they're saying that Trump is implying that he's going to remove his nomination, I don't think that that's going to hold very much water. I think what he's saying is, last time people were telling me to nominate Kevin, I didn't. I went with Powell because I was being influenced by another person. And I made a mistake by going with the influence of the other person and not going with my current choice. Because he said, I think we're going to do something. That final statement kind of says it to me.
Well, to your point, because when I sent this to you, I was like, oh, great. He's really keeping us on our toes. Like he says this and now he's, reneging and going against Kevin Warsh, which kind of seemed like a total right turn from where he was going. And when I went back on this morning as we're preparing for the show and I'm looking at this, it says this is misleading. The mistake he admits was making a nomination for Powell as Fed chair in his first term, not nominating Warsh. Now Trump was speaking about opting for Powell in November of 2017 because his Treasury Secretary wanted him so badly. So it sounds like Kevin Warsh is still in.
Yep.
And overall, even though he has somewhat of a hawkish sentiment, the markets and people have digested that this is going to be a great leader to champion this next kind of season of the Fed as the new Fed incoming chair.
I would say that it seems that the market was fairly happy with the Fed chair nomination, although we still have some stickiness of volatility here and there in pockets. I think we talked about it, and we might get into it being more of a rotation. I'm much happier with him versus who I was hearing whispers of who it might be, Mr. 1%.
Yeah.
So I'm glad, because I said, I'm like, I think we should cut some more, probably like 2 more times. But cutting by 1%, I mean,
that can get dangerous too.
And that's just the only reason he's saying that is just to get in Trump's ear and get a nomination.
Yeah.
So I'm glad we got who we got. Hopefully that, pulls through and we get Kevin. I think him and the Treasury Secretary and Trump will work very well together to get the economy, continue with the economy rolling in the right direction, keep getting inflation under control, but also loosening the belt more and more on money supply so we can kind of get back to a more normal money flow movement over there.
Well, we do have obviously some underlying issues still with the overall economy that the Fed is sorting through, that this administration is sorting through with policy. Some sobering data this last week on the U.S. labor market. It announced job cuts in January more than doubled year over year, hitting their highest level since the 2009 Great Recession. Most notably, these layoffs are occurring while GDP continues to grow at approximately 4%, accelerating the decoupling of employment from economic growth, which is really a phenomenon. If it persists, that could have profound economic, political, and social implications. We've got some data coming out this week was it job openings or
CPI? We have non-farm payrolls. We have a lot this week. Friday is our biggest day. I believe Wednesday, or the day this podcast is airing, is the non-farm payrolls, or Thursday. I can't remember which day, but this week we have those reports. Yes.
So if
And unemployment rate. There we go.
there we go.
Unemployment
That's
rate.
what
That's what it was.
too.
Not Joe. Yeah. I was like, Jolt's is last week.
Yeah,
Unemployment rate,
unemployment. Okay.
Yeah. Which is still historically low.
Yeah, I mean, you think it's what kind of not a sound the alarm, but we're getting to maybe some more concerning levels in that 6% range. Is kind of what you're saying is historically.
Yeah, we always cruise around the 5% number, and I think we're still sub 5. I haven't even looked at it in a while. I think we're like 4.7, 4.8, somewhere in there, maybe.
I'll look it up right now.
It's just not that big of a deal. It's just not that big of a deal. It's a drag a little bit on the tax, our taxes and benefit system, but that's really all it drags on.
December it was 4.4.
Probably gonna be 4.5,
4.6, something like that in January. We'll see.
Not really not that big of a deal. It's we want people employed and we want maximum employment, but there's always going to be people who don't work. So we have to have, and there's more and more and more and more people, and a lot of people are, the reason that the economy, I think, is growing at such a breakneck pace while you see unemployment going up is because we have a lot of sales and revenue generating that just don't require the human interaction that it used to. A lot of it's just digital. And so we don't need a person there to facilitate that. We don't eventually need data entry people. So to me, we don't need to have a 3% unemployment rate in the market ripping for, everything's going to go good. We just don't need that level of workforce. So people have to learn to grow and adjust their expectations to realistic outcomes in the market based on how we do business today. I mean, if you would have told people in 2019 how fast digital adoption would have been, and that was forced due to COVID and all the problems that came from that, they would have called you crazy.
Yeah, it is pretty well.
And look at where we are.
Yeah.
So you have to flip on your head how you think about how business is done, because if just the way we perceive things in certain avenues moved that fast, or the percentage of I could barely do anything digitally. I mean, life insurance, just for an example, just an easy one I can bring up. It was like a freaking joke to think that there would be non-fluid underwriting as a standard. That was oh, you qualified for non-fluid underwriting. That is the standard to do now. That was because of, if they didn't force it fast forward, these insurance companies would have closed.
Yeah.
It's so rare to have to do full fluid underwriting now. So that forced innovation happened in so many different areas. And I still think people are thinking we're back in 2019.
Yeah.
It's 2026 and it's only 2020. It's old ways of thinking. You don't have to think 6 years ahead. That 6 or 7 years is 15 or 20 of change that would normally happen. It really accelerated stuff.
Well, I guess my question is, because we are seeing great growth, and I think we're going to continue to see great growth in America.
I agree.
I think the question I have is, if wages aren't growing and jobs aren't growing with it, there becomes a disparity and a gap that continues to widen. And the question to me is, if growth no longer translates into jobs, then what breaks or starts to become very unstable? Is it politics? Is it consumer confidence? Is it social stability? Those are the things that I'm more curious just to kind of see, hey, if we're going to see insane growth, which I think a lot of people think, there's a lot of data that supports America is going to see a ton of growth, but we're seeing more technological advances of automation and AI, and there's less value and sharing of that growth that is created by American citizens, and it's more just corporations. Then that's where it'll be interesting to see, does this wealth gap continue to widen even further and further and further? And the rich are obviously, anybody, and this is why we say you got to be in the game on financial investing, right? Like you got to be able to participate in the growth that's getting captured and who's benefiting from it, which is corporations, stockholders, business owners, real estate owners, things like that. I'm just curious what your thoughts are on like some of those disparities. Does it hit a point of critical mass where things start to break because the majority of people are getting left out on that?
I just think that, and I probably am the only person saying this, shocker. But I like to just think outside the box a little bit more on that kind of thing. And I think when people get too static on their thinking, again, this is why we're very successful with our investing. I think that data point, or what you're talking about, why is growth not driving unemployment rate down? There's too many jobs that are unnecessary in today's economy with the technology. There's too many, and this is also, take one step further, that's because the majority of businesses in the United States are small businesses. They don't have the time, they don't have the money, and they don't really have the need to innovate as fast as some of the bigger companies do. Because of that, you're going to have data entry people that are not required. You're going to have people answering phones that are not required. You're going to have a lot of these jobs, and those jobs are going to translate into that data figure and skew it in a way where, hey, there's 100,000 less people in the United States doing data entry this year than there was last year. Well, those people are probably unemployed.
Yeah.
There's not really those people don't have a skill that the economy demands. So I think what people are going to start having to do is start having to wake up and smell the coffee and start getting jobs in areas where the economy is demanding. It is not liberal arts. It's not all this other stuff. And I think what's going to really be shocking is we're going to see this huge disparagement in Gen Z of not a very large portion of them not being successful because they're too focused right now on things that don't matter.
Yeah.
And then Gen Alpha, which is like our kids, are going to be like rock stars because they're raised by the generation, thank God.
Yeah, I'm like, you don't need to learn math. You need to learn activity. You need to learn.
Or our ideals are a little more center line. Like, hey, we may be Democrats or maybe Republicans, but we're not flaming libs and we're not crackpot far right people. Like we're pretty center. And we did things a little bit the old school way, and we went through the technology change that we talked about. So we have a good mix of both. Gen Z was really the first generation that got like all technology and
Did you see the report that came out that Gen Z is the first generation that is less intelligent and or well off than their parents?
No, but I believe it.
It's like it's a big,
we were just talking about it. We were just talking about
X. It was pretty wild.
It's hyper emotion. And a lot of them are just, shame on the parents. It's letting your kid do that. You're ultimately the sail and the rudder for your child when they're a child. If you are too focused on being their friend and not focused enough on being their parent, that's shame on you. But back to what I was saying, I think there's too many jobs that are non-necessity. And those non-necessity jobs that could be done with AI, that could be done with other things, that would force the hand of people to get jobs that mattered, those are going to skew the unemployment rate in a way up. And I to a point, I feel bad. But, at some point, the garbage man's not going to be needed. They're going to automate that. And they're going to fully automate probably delivery. And they're going to everything is going to automation. That can, because you don't need to buy insurance for an automated. There's a lot of that. And guess what? That's going to drag revenue up. But guess how many? They're not going to provide as many jobs. So I think what you have to do is what are those corporations? They're businesses owned publicly by people and then also by their major shareholders, which are likely their founders. You have to own a business. Selling your time, just like riding a horse, is getting long in the tooth. There's not a lot of jobs where selling your time makes sense for the company buying it. And people are getting all disenfranchised of, they're, automating manufacturing and they're doing this. It's safer. It's faster. It gets us goods at a cheaper cost. Consumers. There's no sick days. These are things that when you own a business, you understand that you don't want to pay for.
Yeah.
And here people are getting all, bent out of shape. Oh, hey, I want to have a full pension and only work 3.5 days a week. That's the problem.
Mm-hmm.
The problem is people don't want to work as hard as they used to. They don't want to work the hours they used to. And everybody's getting soft. So what are they going to do? They're going to hire a robot. No softness, programmed in efficiency and predictability. That drives profits up and reduces drag on revenue. And so that I think is what we're seeing right here. We're seeing jobs go away that don't need to be here. And they're not somewhere else like they typically were. 20 years ago, if you got laid off from being a data input person, you can just go do it somewhere else.
Yeah.
More and more places are like, we're not going to hire that and strain our payroll. We just don't need to do that. We can hire a service, a company that just does this as a service, a B2B service. We don't need a person. We don't need the liability. We don't need the sick. And that ultimately is really that's the work ethic that's nowadays common. That's how people don't stick at jobs very frequently, and they constantly move to other places. And this is what you get. You make your bed, you lie in it.
I feel like we're really in an adapt or die timeline right now.
Yeah.
Because of how rapid technology has advanced and the efficiencies and the productivity and the growth and a lot of the positives that we're seeing, it's also highlighting very quickly the areas that used to be blind spots are not as easily seen very fast.
Mm-hmm.
And because we are a capitalistic society, and we are a society based on productivity and value creation and, creating the best results, we're eradicating a lot of those things very, very fast. And so I don't care who you are, what industry you're in, if you want to not only survive, but more importantly, if you want to thrive and you want to build wealth and you want to create, that moat around you and your family, you have to be willing to adapt to what is changing right in front of our eyes so quickly today. And so when I see stuff like this, and I think you did a great explanation of it, because I do believe this is one example of, yes, we're in this transitory time where there is going to be some collateral damage for jobs, for certain types of skill sets or people that are just going to go away and they're not going to be needed. Yeah. And I mean, and you can go back and look at over the timeline of history, very many similar use cases that maybe have a different context,
like a fireplace.
Exactly.
It's as funny as that is, most houses, and especially in California, but most houses come with a gas fireplace now. That was when I was a kid.
I love a wood fireplace in the house.
So did I. But remember when it was whoa, they have a gas fireplace. That was a luxury. Yeah. Now it's a standard.
So I just think that we're in kind of this messy middle right now where with a lot of the technology that is coming out, specifically AI-driven stuff, and how it impacts or displaces certain industries or certain jobs or roles or even certain skill sets altogether, people are having to figure out how to, readapt and figure out where they fit in. I think companies are doing the same thing. And at the same time, overarching from a macro picture, I think we're seeing new industries that are slowly starting to pop their head up above the surface that most people just don't even know are there yet, or maybe don't even know are industries, which that's the beauty of new blue oceans being created through evolution and innovation in the world that we've created, right?
Yep.
So I think that's obviously something that's going to be very interesting to watch unfold. And again, you just got to lean in and be willing to adapt and just continue to check your biases at the door and go, I don't need to be right. I don't need it to stay the same. I just want to win. So what do I got to do to position myself to where skate to where the puck is going, right?
Yep.
Now, one of the things that continues to be a big deal, and I do see as a major issue, and we haven't gotten checked, is overall debt. Now, global debt has soared to an unprecedented level of $359 trillion, setting a new world record.
It's not going to slow down, especially with buy now, pay later.
And so this is a very interesting discussion, right? Developed economies account for $231 trillion, emerging markets $128 trillion, with the US and China alone representing 1/3 of that entire surge. This explains why investors at least in some way, shape, or form, are going, this might be a concern. So we're seeing more people, panic and rush into things like gold and silver as safe havens because they're concerned about defaults or wars or market turmoil, hyperinflation, whatever you want to call it. So is the panic from your perspective warranted? We saw, I think it was JP Morgan said they think gold is going to go up to 8,000 an ounce this year. I think it pulls back to 5.
Yeah, probably the biggest bull I've seen. I don't know his or her name. It was like they put a $12,000 an ounce call out.
I better anybody Peter Schiff.
No, it actually wasn't Peter Schiff.
That's surprising.
Although I'm sure Peter Schiff has a $12,000 an ounce room somewhere in his house. I don't know. I gold is going to do what it probably. I think the gold price will steadily increase. I don't think it's going to go into a like decade-long contraction like it did through the mid-2000s into the teens. But I don't think it's going to like double in value overnight. I just don't think it's going to do that. It doesn't have the it just doesn't have the reason to do that. The other thing that a lot of people keep discounting that is going to eventually happen is we're going to be mining in space in the next 2 decades. And the majority of the gold that's on planet Earth is not from planet Earth. It originated somewhere else in the cosmos, and it landed via meteorites or things like that. And so
it's crazy.
There's tons of companies. It's crazy.
Well, there's an example that you just said, right? Like, who's thinking of like, oh, I want to invest in a company that's going to be mining gold in space?
Well, they already exist. They're just not
working in
public.
that industry.
And they're like, hey, if we can identify an asteroid, if we can figure out how to land enough rockets onto that, and they're not big, we can pull them into orbit. And mine them safely in Earth's orbit.
That's wild.
That's the whole goal. And they've already said, oh yeah, look at this asteroid has about 1/10 of the world's current supply on it. Like that one right there. And we can like do the math to say, once we know how to do this, we can go get it. And we're not that far away. And so like,
that's crazy.
What happens when the supply skyrockets through the roof? The Bitcoin story is scarcity. The opposite's going to happen. Once it becomes a lot less scarce and easier to mine and easier to do, then people will stop pumping the price up.
Yeah,
so
stop pumping it gold, right?
There's all these things, and that's going to happen in another way to another area. Cars will eventually not be cars like they are. Rubber tires won't be what they are now. One day they won't inflate a basketball on NBA games, and we'll have maybe the airless football game. All this technology that moves the ball forward, no pun intended. And it always will get rid of another technology, and that technology needed jobs. And when it was the new thing, it required new jobs to create it. It's just this kind of like cycle, a circle of life. So
you're not as doomsday as many people might think and say and feel. Now, at what point does debt and the levels of which
when it's not serviced?
Okay.
That's only bad when it's not serviced. All of our debt is serviced.
Okay.
People, a lot of times...
And do you see any point in time in the near future that it is unserviceable? And if so, what happens then?
No, interest rates will continue to go down. So our interest payments are going down significantly month over month for our debt servicing. We're going to refinance that, a lot of it. Once it goes down a little bit more, I'm certain of it. And a lot of people are doing buy now, pay later. So I just don't... I don't see it being as big of a problem as a lot of other people do. And the more money that people make and the more money that people spend, it's going to increase that debt number over time. As long as we service that number and the interest rate on that servicing of the debt doesn't go too out of whack, which I don't think it will, we're going to be fine. But hey, subscribe to the person that's been yelling that for the last 7 or 8 years and see how much money they've made.
Well, we saw silver prices crash 22% in 2 hours, drop below 74 an ounce. It looks like it's kind
of wild that they don't have the same type of locks or stop lock. Like that would never they would close the market temporarily.
Yeah, that is interesting.
The market maker in that stock would be like, whoa, I got to make sure there's not fraud going on.
Yeah.
They 22% in 2 hours is fucking wild.
That's
That is nuts.
yeah, that is crazy.
But that's the difference between a spot market and
Leverage
and a
market.
it's a spread ask market. It's a little different. But yeah, welcome to investing in commodities.
Well,
Can you imagine people that are leveraged?
oh yeah, that's what I'm saying. I mean, it's
Wow.
and there's a lot of leverage that seems to be creating a lot of volatility across all markets, being that it's become so easy with technology to have a little phone and, throw up a, 20x or 50x or whatever, people are doing now, whether it's in crypto, whether it's in stocks, whether it's in precious metals. Do you think that advancement in technology and how it ties into the average retail investor is a part of the problem or part of the volatility, aggressive volatility that we've seen in recent years because of some of that technology come into play now?
I definitely think that leveraged, I think that the availability to trade on margin and trade options to retail investors has been somewhat reminiscent of student loans, where it seems that it's a benefit to the consumer of the product and ultimately it's just to turn them into a profit center.
Yeah.
Exit liquidity.
Yeah.
So, and same with leveraged ETFs, because I just don't think people, I know people for the majority as retail investors especially, don't understand the magnification of leverage when they lose money. They want to see, similar to why people do slots, they want to see a really high rate of return really fast, but nobody talks about losing on slots. Everybody talks about the potential win, correct?
Of course.
So that's the mentality with this, but then they don't realize, unlike a casino where once you run out of money, you cannot continue to play. This is not how that casino works. A lot of these people buy and open and trade on margin without knowing it because they just blast through their paperwork and they don't read it. And so they're trading on leveraged margin. So not only are they leveraged, so they're getting a multiple on the upside and downside, they're using somebody else's money and paying interest on that. So now when they take a loss, not only do they take a loss, maybe they're leveraged at a 2 or 3x loss to what the actual market would have been. They're paying fucking 5-6% on that. It's like, dude, it's pretty, when people, and the biggest, hopefully they don't sue me or send me a cease and desist because I don't want to have to poop on anything. But Robinhood is the biggest, and the worst at it. 100% of every single Robinhood account I've ever seen, excluding mine, I'm talking about other people that show me their statements, they are buying 100% on margin and have no idea that they're doing that.
Oh, wow.
They literally bring me their statement like, oh yeah, guys, I'm like, do you know every single one of your stocks is owned on margin? No, I put cash in the account. Yeah. But when you purchased it on margin. Oh yeah, no, I had no idea. They're paying 5% like a month.
That's crazy. Well, good thing you got a Robinhood account.
That type of thing, that little thing just right there, and then that's the same company, along with other custodians, that are offering people options trading.
Yeah.
And like extreme levels of leverage that were never offered to retail investors. It's not good for them. That's why I don't set it up on any of my clients' accounts. I won't even allow it. Why? Because you don't know what you're doing. And I'm not going to let you take, margin at Schwab goes up to 15.25%. Like the interest rate they're charging you. Dumb.
Well,
we're not doing that.
Well, I feel like a part of that is, a big problem with the crypto markets, right?
Well, yeah, but the problem is retail investors and not having patience.
Yeah.
Yeah. Everybody wanting to get wildly rich at the snap and thinking that that's a reality because they see it's literally like somebody's winning the lotto in the next some point in the future. And it's like knowing that that's going to happen and then shutting everything down and only buying lotto tickets for the rest of your life.
Yeah.
Because one person is going to win the lotto. You're not going to ever win the lotto, even if you do that. It's just, but people think it's easier than it is, and it's not.
Yeah. Well,
And that's one of the problems with social media is all these gurus and gurus talking about how easy it is to be rich. Now, all you have to do is pay them, and all you have to. That's the problem. And then the other problem is dumbass kids and people that don't want to put in the work believing that.
Yeah.
And then using money to support those people that continue to spread that message, and it's cancerous upon itself.
well,
We saw one of the biggest purporters of that, Ty Lopez. He just got, finally, hate that guy. He just got
I saw that a Ponzi scheme indictment.
we've brought his name, has been a long time,
Mm-hmm.
but we've brought his name up, and they're all in the same group
Yeah.
of
that
just
was-
jackass people, man. They're just the worst people ever.
Yeah.
They steal people's money to say that they're helping people, to then get caught and then just double down on their lies.
Mhm.
We saw the dude that did that locally around here that we know, Joey.
Oh, yeah.
Yeah, with that crypto scheme. So it's just like, it's so obvious to me, and it takes a while because it's been years since we've talked about him, but it's finally coming to fruition.
Yeah.
And this is the same guy that's posing with Lamborghinis and telling you he has some big house and doing the Dan Bilzerian all over again.
Mm-hmm.
So it's just boom, boom. Anybody that looks like that, and I mean it's like 99% of them, it's that simple. That's the cloth they're cut from.
Yeah.
They're a fraud.
Yeah. It's unfortunate that has become the MO of so many of those people because it's been proven time and time again.
Where's fucking Noggle at? I haven't heard that motherfucker's name in a while. Where you at, Poppy?
I haven't.
I say
There's a lot of
there's a lot of people that we've talked about that were so big in the finance.
Mhm.
Hey man, here I am.
Yep.
I'm still here. The guy that, the finger pointer that everybody got me. Oh no, you're wrong. That's all I gotta say. It's so obvious once you've been successful to identify people that are not successful. You know exactly what I'm talking about.
Yeah.
You know exactly what I'm talking about.
Well,
Because you've been around them.
It's been unfortunate to see people kind of fall victim to that. And yet, you and I have both been very adamant about certain individuals that just be careful and be very discerning about before you part with your hard-earned money or before you go and make a big decision based on somebody else that the facade and the veneer looks good. Make sure you see behind the kimono. Make sure you see behind the curtain.
Yep.
And we'll leave it there. Now, talking about crypto, we had a bloodbath last week, and it's really still trickling into this week. So we saw upwards of a 50% pullback on Bitcoin in one day. Last Wednesday, the airing of this show, I think right before we were recording it, it was kind of when it was starting to go down. Now, since October 10th, crypto markets are now down 50%, erasing $2.2 trillion worth of market cap. Now, that being said, we've seen some pile back in since this statement was made. But just to give you an idea of how aggressive and how sharp that pullback was, I mean, people were losing their minds. Bitcoin had officially erased all of its post-election rally, now down 10% since Trump's election. So Trump was definitely catching some heat for being the, pro-Bitcoin, pro-crypto president, and ultimately all markets are at all-time highs except for crypto, complete opposite. But I saw it was an actually kind of a good breakdown of this. This one dude, man, he is obnoxious. He's kind of funny at the same time. I don't know if you've seen him on the internet. His name is
What's his name?
Nick.
Oh, Massarelli?
He got a big old nose. And that he makes fun of his nose. So I'm not saying this to hate on him, but he's
translated.
Okay.
Bitcoin just bounced.
So he's very obnoxious.
Oh, I hate.
He's very loud.
He does it on purpose.
He does skits as like a funny way. he's actually a pretty like from a roundabout people that
You
know
look
him,
at that and you tell me you're not mad at that.
people say that like
His
he's actually a
face makes me-
smart guy, but again,
face
people that
makes
are
me
just
mad.
overly obnoxious online, I personally have a tough time, kind of getting back with. But he did do a breakdown on kind of what we were seeing and why such, normally when we see the market pull back, it does so, sometimes it takes the elevator down, but not down to the fucking basement.
Takes the escalator.
Escalator. There we go. And so he shared this statement, and I was curious on your thoughts on it because I thought it was actually a relatively good breakdown of kind of what we saw.
He drops a golden nugget here and there.
He does. But he's But hey, not hating on Nick. If you see this, brother, I actually appreciate some of the funny skits that you do. I think it's.
I'd love
playful.
to do a skit and make fun of you. You can make fun of me.
But here is what his breakdown of what was happening with because Bitcoin, as you said, was the whale that pulled the whole sea of fishes down with it. Let's give it a listen.
Bounced off at $60,000. We're watching the biggest single day crash since FTX in real time. Let me tell you what just happened. 1 hour ago, MicroStrategy dropped their earnings with a $12.4 billion loss. Michael Saylor paid an average of $76,000 per Bitcoin. Right now, he's down $15,000 a coin. The moment that number dropped, the market broke. We've lost $2 trillion in crypto value since October. The entire rally since Trump got elected, gone. We're below where we were on election night. Every support level that mattered, 70,000, 65K, the 200-week moving average, all gone in 24 hours. The next level that everybody is watching right now is 58,700. That's the electric cost to mine a single Bitcoin. In Bitcoin's entire history, it has never traded below the cost to produce it. If that breaks, there's nothing until the 40s. This isn't a dip. This isn't a correction. This is capitulation. And look, I'm not going to lie to you. This hurts. If you're holding right now, you feel it. I feel it. I'm down nearly $1 million. Everybody in this space feels it. Yet moments like this are where fortunes are made. But it doesn't mean we're at the bottom necessarily. We could drop another 30% from here. 50K, 35K, nobody knows. What I do know is this. The people being forced to sell right now, they don't have a choice. Margin calls don't care about your conviction. When the leverage is finally gone, the selling stops. But we're not there yet. And until we are, buckle up.
So I think
I like his face in that frame a lot better than the first one. That is true.
So I was gonna say, what's your take on
That would be he said the same thing I said in a little bit of a different way. His is more hanging on leverage. I do think that MicroStrategy is a huge problem in the space, as a lot of people think that they're a savior. They own too much Bitcoin.
Too much consolidation under one hand, right?
Yeah, they, scarcity, that's Bitcoin. Then those same people want to hoard it all. They want to do the opposite of what they're preaching. Like, the reason this is so good and the value goes up because scarcity. But then what happens when one company owns 7% of the Bitcoin ever developed? That's not good. That's just not good. And if I said this to you, I think the thing that would move the market that much is if MicroStrategy has to sell.
Which Saylor said they're not selling.
Yeah. He's not in charge of it
yet.
Yeah. There's, just like we're seeing in the FTX thing, which I still think Sam Bankman-Fried is a fraudster and got a slap on the wrist of what he deserves. But he's saying, hey, look, at one point, I was completely taken out of control of my company, and the attorneys filed bankruptcy for the company. I never filed bankruptcy. I wouldn't do it. And so they took control of the company from me. The board did. That's what would happen. That's what would happen with Saylor. And he's already done it. He did it in the .com bust with his company. Already lost hundreds of millions of dollars for people. Preaching the same stuff in the internet boom and bust in the early 2000s. So to me, I'm a believer, as bad as this looks, and I mean, I don't have that much in crypto. I mean, Matt has way more than me. I have way more in stocks. And look who's right again. My account's down like 60%. I'm not doing anything different. I'm not taking money out. I'm putting the exact same amount of money in, and I'm not stopping.
You're just DCAing all the way through, right?
Same thing I do, because to me, all crypto is just a sexy version of a derivative. It derives its value off of something else. Typically, it's partially off of what Bitcoin's doing, and then what is the stock market doing from a tech side, on the tech side, really, from as a whole. That's what they are. It's like options without options contracts, and they're derivatives. That's how I view crypto. A lot of people think it's more than that. I don't. So if I'm in it long term, and I'm just gonna keep buying these things, same as I do with my stocks, same as I do with my ETFs, same as I do with my mutual funds, and it's not really more complicated than that. And in 1 year, I'm pretty certain the price that what I bought things at, it's gonna be higher. And if it's not, I'll be here saying the exact same thing. Wow, I've been buying stuff and just averaging my positions down and buying way more than I was. Because if I'm buying it at 3 times that value, you know damn well I'm buying it at 1/3 the value.
Yeah.
It's that simple. If you are buying Bitcoin at 70 or 80,000 and you wrote it up to 100 and we're talking about how you made money, you are an idiot for not buying it at 68 where it is right now.
Well, what are your thoughts too on a lot of people are like,
And I'm not recommending you buy it.
I'm holding forever. I'm holding forever. I'm holding forever. What are your thoughts on taking gains along the way? Do you believe in that?
Yeah, but every time I've done it, I've sold to buy another cryptocurrency. I don't take it out of my account.
Right.
So all I do is if I'm like, oh wow, I'm on a really big run, like when Bitcoin was down the other day, Ripple was up like another 6 or 7%. I sold some of my Ripple and I bought Solana.
Mm-hmm.
So I sell it to buy other cryptocurrencies.
Rotate into other opportunities.
But I don't ever take my crypto out of crypto.
Yeah.
I think it's so early to what it could and will be, and I still don't even know what that is. I'd rather just not try to. When I go to the casino, I'm happy making money and not winning a jackpot. And somebody has to go and has to chase the jackpot, and they'll walk out with nothing. I'll just walk out with a little bit of something and be very happy.
Mm-hmm.
So that, to me, is easier. I know it's going to work. I believe in this space as a whole. Everybody knows I'm not convicted on Bitcoin like how most people are. But the space as a whole is going to benefit, and I want to be in it.
Yeah.
So I'm going to continue to put my money there, and I'm going to continue to not worry about what the market does, because that's not where my net worth is at. Not even close. My net worth is in stocks and my company, which is where I think most people's net worth should be. Or real estate if you don't have, Matt does both, and I don't have as much real estate, but something tangible that you can actually put your money to work at. And crypto is just too volatile for me to put all my money there right now.
So it'll be interesting to see what kind of transpires over the next couple of months with crypto. I think we're still in, a settling or, consolidation type of, there's going to be a lot of chop as Ryan always kind of notes, and we'll see some horizontal, up and down, but it'll stay within some kind of range. But it does feel like there still could be another, pullback of finding a bottom. My conspiracy theorist, this is a little out there theory is, whether it's because we saw a lot of stuff with the Epstein files and Adam Beck and some of the early Bitcoiners tied to Jeffrey Epstein. And there's a lot of weird, bad narratives around Bitcoin right now. And I personally just think that a lot of this fear and a lot of what's going on right now is a way to shake out retail, is a way to get the prices as low as possible for some of the government transition and banking transition that we know they've been talking about for some time to find its way into crypto at a basis that they feel good piling in at. Now, whether or not that's true,
sure, that has to hold something,
right?
That would make sense to a degree. Is it happening? I don't know.
Yeah, it's hard to know, right? And we won't really know until we're looking in the rearview mirror and it's like, oh yeah, see, it's always easy to call the bottom or call the top.
Hindsight.
Yep. And, some of these theories make sense. So it'll be interesting to see what happens. But at the same time, right, to your point, Ryan, I got a little, war chest of cash that I'm like, okay, I'm not buying all now. I'm just going to throw a little bit in. And if it pulls back to this level, I'm going to throw a little bit more in here. And I'm going to keep some dry powder to make sure that for a rainy day, I've got the opportunity. And also I'm just executing on a smart plan, like you said, of just DCAing no matter what, wherever the price is at, like it's just going to go in. And so that's I think the strategic and smart approach, especially in volatile stuff like this, where you can catch good highs and you can catch really low lows. You just kind of got to take that blended overall strategic approach to it's all going to, iron itself out over time. And I'm believing that iron is going to equal a net positive for me.
I agree.
So let's shift over real quick to real estate and wrap up there. I thought this was a great breakdown from a guy that I've been following online for some time. And it was relatable to me because I know so many of you follow myself on the real estate investing journey and many other real estate investors. You are probably a real estate investor, many of you, or you're looking at getting into real estate. And I thought this was a great breakdown because I do believe that there's really 3 types of real estate investor avatars or personas. There's really 3 types of people in real estate investing that are successful. 1, you have the financial guy. 2, you've got the sales guy. And 3, you've got the real estate guy. So let me just break this down real quick. The financial guy can make great deals happen because he fully understands the financial engineering behind them. He's super valuable because most people are sales or real estate guys. He also typically has great lending relationships, understands financial markets and kind of the financial world, right? So like really understands the engineering and the economics of deals, how those inner workings work, right? You have some of this, you may not, feel like you do on the real estate side, but you really understand a lot of the financial backstop of the world and how it works. And real estate just happens to be another asset class or vehicle that applies to, right? So like I would call you one of the financial guys in real estate. Number 2 is the sales guy. And this is really where I got started, which the sales guy can pitch the version of the project better than anyone. He is also a great relationship management person, whether that's with brokers or tenants or investors. He can arguably bring the most value to a project by getting tenants to the table or investors to the table or finding a great off-market deal from a broker or seller, right? So this is the sales guy, which again, extremely valuable. If you bring the opportunity, you have a lot of leverage in any kind of negotiating table, right? The posture you can bring by being the person who found the value and captured the value or brings all the value together, really important. That's the sales guy. The third one is the real estate guy. The real estate guy knows real estate inside and out and has a great feel for a good project. He can visualize what a property can be, not what it is now. It's almost just a sixth sense some people have. These guys have the vision to close deals without lease extensions or are the ones you hear doing home run deals that nobody else thought of, right? These are the individuals that maybe are in the trenches and operating and kind of just get their hands dirty and just learn from being in the school of hard knocks. Now, those are 3 really important things. And so the last thing was, I've come across a lot of people who occupy, call it at least 1, if not 2 of those things. Rarely do you find people that can be all 3, that understand the financial engineering, right? That are the financial kind of mind, that can also be the sales kind of individual, and then also understand kind of the ground up soup to nuts of how real estate deals and operations work. So if you can be all 3 of those are really some of the generational talents, right? You see the people like the Sam Zells and individuals like that, where, he had the hedge fund. He also was the guy that was buying the mobile home parks and figuring out how to, right? Like he understood all the levels. So I just thought that was kind of interesting, depending on who you are and where you're at. You might be 2 of those things. You're like, man, like I can either double down on these things or maybe I can, work on this area of weakness as, something that makes me a more well-rounded investor. Maybe you're just somebody like, I got 2 partners that are experts in this. Why am I trying to be these other things? I hate spreadsheets. Let me just go be the sales guy and build the relationships and schmooze people and, build those opportunities through interpersonal connections, right? So I just thought it was kind of a cool breakdown of like identifying who are you, where your skills lie, based on the team or the people or the relationships you have around you. What gaps do you need to close, or what can you double down on and go bring a value to other people and find a way where 1 + 1 of you guys collaborating equals 10 versus just two financial guys trying to do a deal together, right? And it equals two. So kind of cool there. I do believe that those are identities that always succeed in real estate. And especially in times like right now, identifying where your real skills are at, especially when I'm talking about AI and technology and the things that make you obsolete or this or that, right?
Yep.
Find the things that nobody can replicate, that only you can do in your world. And there's definitely a lot within each of those buckets. So something cool there. I also would say that we are beginning to see the next real estate cycle begin right now. We are seeing some repricing kind of complete itself across many different asset classes. Income and appreciation returns have now slowly started to turn back in that positive direction. We're seeing a lot of real estate start to hit the market. We saw 2 condominium towers in California, basically, that were purchased for $330 million are, now in default. We're seeing a ton of single family product come to the market. We're seeing a lot of debt start to default a little bit. So I think we are, we're seeing a lot of opportunities start to flow through the system. And I believe that this is we're coming out of this real estate lull cycle. I mean, think of, this is a wild statistic. Over 70% of licensed realtors didn't sell a single home last year. I mean, that's a tough way to make a living when only 30% of the entire realtor population is selling homes, right? So it's been a tough go for commercial real estate investors, for commercial lenders, for banks, for realtors, for service providers, really for a lot of people in the industry as a whole. And yet, a lot of consensus on the street right now is that there is some really exciting and brighter times ahead. And I think we'll hopefully start to see that with this new Fed chair coming in.
Hopefully.
With some of the new policy getting rolled out by the Fed. And it'll be interesting to see, how the real estate markets absorb all this new information and all this new policy. So very interesting times there. Overall, a great time to be investing. That's what I can say. I mean, what are your thoughts overall on kind of the market and what you are telling your clients and customers and people that have a little dry powder, as we are, heading into kind of the meat of this year?
Yeah, I'm telling my clients to put their money in the market and put it to work, especially given the last couple of weeks. If we get the GDP numbers that are being forecasted and we go to the mid 7s, which I think is highly likely, it's going to be a good year to be invested in real estate, I think, and in the stock market.
Absolutely. Well, as always, we appreciate you guys. Thanks for tuning in. If you're not watching these videos, we now have them on Spotify and YouTube. You can see our faces made for radio. And we love connecting with you guys. So don't forget to shoot us a text at 844-447-1555. If you want to connect with Ryan and his amazing team, text the word X-ray to 844-447-1555. If you want to connect with me and my team on anything with real estate, passive income, the deals that we offer our credit investors, text the word deals to that same phone number. As always, keep investing in yourself and your wealth on your march to $1 million and beyond. We'll see you guys in next week's episode. Cheers.